Now that we've um, calculated the AFN, we have to allocate that additional funds needed to whatever sources of financing we opt for, and then determine the feedback and incorporate that feedback into an additional pass. If you're following along on the steps that I've posted to the website, calculating AFN is step 11. So now it's time to allocate the AFN, and I gave you instructions on the Ruger handout in class stating that we would fund all of it, if we could, through the sale of cash or marketable securities, actually. So long as this balance did not drop below 20% of the current year's sales. Well, the current year in this particular case is the estimation year of 2012. Well, we don't want cash and equivalents to drop below 20%. So if we right now they're at 24.62%, resulting in cash and equivalents of $113 million. But basically, Ruger's saying, we don't really need that much money in cash and equivalents. We can survive quite happily on uh, less, so long as it doesn't drop below our comfort zone, which is 20%. So 20% times the current year's sales or I should say 2012 sales, would be 92 million, which is a decent decrease. And I'm actually going to hit undo uh, so I can talk about this. The first time we ran it, assuming 24.62% was the level that we wanted our cash and equivalents to be, we estimated cash of 113 million, which led to total assets needed of 288 million, which led to an increase in assets of 81 million. Now I'm just going to hit redo, and I want you to watch what happens to this increase in assets along with this cash and equivalents number. Cash and equivalents drops to 92 million, and increase in assets drops to 80 million, and that lowers our additional funds needed. So basically, our willingness to not build up our cash and equivalents to the same percentage of sales in 2012 as it was in 2011 has led to a reduction in additional funds needed. But I still need some, and the handout stated that Ruger was going to borrow the remainder of the additional funds needed. So what I'm going to do is calculate or add that additional funds needed of 7.88 million to my long-term debt. And I know Ruger didn't have any debt in 2011, but what I'm trying to do is just show you the process you would use. And many companies do have debt. So what you do is take the previous year's debt and add to it uh, the amount of additional funds needed that you intend to finance with extra long-term debt. So that would pull our long-term debt balance up to 7.88 million. And now I can start getting my feedback. So what I'm going to do here, well, I could do my second pass right now, but actually what I think I will do is finish my balance sheet, and I would just like to make certain that it's going to balance. That's just a good way to check to see if you did things properly. I have my total assets, but I haven't yet finished my total liabilities or total stockholder equity. So I'm just going to assume that my notes payable will remain the same. I can calculate my total current liabilities. I'm going to use auto sum to do that. Just double check to make sure it sums the right cells. Other liabilities I'll leave the same, but if there's any reason in the real world to expect those to change, go ahead and change them. I'll use auto sum. Let's see how it does. What I really want it to sum would be current liabilities, long-term debt, and other liabilities to give my total. And then stockholders' equity, I don't intend to issue any additional common stock, and I haven't stated I'm repurchasing any either, so there wouldn't be any change in my common stock at par. Retained earnings would be the previous year's or previous cumulative retained earnings on the balance sheet, plus the addition to retained earnings is 33.04. Treasury stock will stay the same unless you think there's reason to change it, and so will capital surplus. So total stockholders' equity, I should just be able to do auto sum and have it work. Now I have the left hand total on the balance sheet. I want the right hand total on the balance sheet, which is total liabilities plus total stockholder equity. And this number, the 267 in total assets, should equal the sum of liabilities plus equity to the 266.12. And you can see it's off by $1. When I took the information on Ruger from Yahoo's finance site, and they actually reported the numbers in thousands, so I basically just did some rounding to get them reported in millions. And I did some, I'll say, pretty sloppy rounding, and I have a typo right here. If you look at total current assets and property, plant, and equipment, if I sum those to get my total assets, that doesn't really sum to 207. It sums to 206. So I'm going to just fix that mistake. So if I change this to 206, which it really should be, you now see that total assets here of 267.12 equals the total liabilities plus equity. And it should. And that's why I was doing that, to make sure those two numbers equaled, just as a rough check as to whether I'd done all my calculations correctly. But now I can do my feedback and get my second pass information. The feedback is actually the idea that, okay, hey, I had this interest expense already, plus I'm going to borrow another there might be a little blip. I hit pause for a moment. So the feedback is the idea that I'm going to borrow some more money. And you notice that this changed right here. It was 7.88 million, but it went up by $1 because I fixed the typo right here. But that followed through and impacted my long-term debt and everything. So now feedback. I know I'm going to borrow an additional 8.88 million, and on the handout I gave you in class, I told you the interest expense we would pay on that was 8%. Plus, I'm just assuming I'll still owe interest expense on debt that I hadn't yet paid off from 2011. So here is my feedback number for my second pass. All of the numbers in this range would be what they were from my first pass. So all I really need to copy over is EBIT. And then the equation for this should just copy over fine. Income before tax should be EBIT minus taxes. Interest or income tax expense would be taxable income times that income tax rate. And then these three formulas should copy over just fine too. So based on my feedback of the extra interest expense that I'm going to owe because I'm borrowing this money, my extra interest expense reduced my income a little bit, and that's going to reduce my retained earnings a little bit. So my second pass would be to pop that new retained earnings in, The increase in assets would be the same that it was the first pass, and the increase in spontaneous liabilities would be the same as it was in the first pass. And then this equation should just copy over as well. So my second pass says, hey, due to the extra interest expense, you're going to need to have a little bit more external financing. So you could do a third pass and a fourth pass and so on. And basically what would happen is in each subsequent pass, the additional funds needed would rise by just a tiny bit, with the increase getting smaller and smaller and smaller. The increase was actually pretty small already, but it would quickly approach zero, although it would never reach zero. And I won't expect you to do more than a second pass. I think the test question only asks for a first pass.